Good afternoon. Today is Thursday and it's February the 15th. The time right now is 1:22 in the afternoon. Yesterday night, we see equity markets in the States stage a mild rebound after Tuesday's very sharp decline from the all-time high for most of the equity index in the States. We can see that that was on the back of a hotter than expected consumer price index, or what we call the CPI, and that has actually delayed the expectation of imminent rate cuts by the Federal Reserve. So that is actually seen to be a negative. Now, the market staged a technical rebound last night, largely on the back of earning reports from some of the major companies in the States. And tonight, we're going to be hearing from the retail sales, and retail sales are expected to be softer. We've seen that the retail sales has not been doing too well of late, and that could be another catalyst for the market to come back down again. And of course, tomorrow we have the producer price index, what we call the PPI. And if the CPI is any guide, the PPI is likely to show a resurgence in inflation. So that is all together seen to be a negative for equity markets. So my personal opinion is that equity prices may actually dip back below Tuesday's low. So that being the case, we can see the Dow Jones Industrial Average, the all-time high is just under 39,000 points at 38,927.08, and the low traded on Tuesday was at 38,039.86. So that this level will be revisited again in the near future, possibly within the next 48 hours. And the immediate target will be for a challenge of the December close at 37,720, perhaps even as low as the swing low that we saw on January the 18th at 37,123. So both levels are possible levels of a pullback. So do watch out for a technical pullback in US equity markets. In the S&P 500, we are seeing the same thing. We see a much better rebound in the S&P 500. We see the rebound has actually touched the 61.8% retracement of the high from 5,048 to the low of 4,922. So this is actually seen to be the max. It can actually rebound before the market retreat back below Tuesday's low of 4,922. Immediate target again will be the January low at 4,845 to perhaps test this a much deeper pullback. Will probably see the prices coming back to 4,682. But again, we are not looking at 4,682 for now. We're just going to see how the market pulls back. If we see an equality move, I think the best the market can do, if it's still very, very bullish, will be the 4,845. In the Nasdaq 100, we see that the rebound was a bit sharper than the rest of the other two equity index. Largely on the back is on Tuesday when the market declined, the decline in the Nasdaq 100 was a lot deeper, and so it was only logical that last night rebound was also sharper compared to the other two equity index that we just mentioned. So we can see prices right now has also rebounded back to near the 61.8% retracement of the high of 18,041 to the low on Tuesday at 17,480. 478.23. So right now the market is poised to trade lower in my opinion, but if the market blows above 18,041, then of course the market has resumed its uptrend. But by and large, I think a pullback is actually quite healthy for the general trend. Okay, so do watch out for that volatility to spike over the next 48 hours. Okay, and in Asia we can see the Nikkei 225 continue to trade above the 38,000 points, and we can see that this morning we had the release of the Q4 GDP numbers for Japan, and technically Japan has slipped into a recession because there is 2 quarters of negative growth, and this is technically what we consider to be a recession. So despite the negative connotation, we can see that the equity markets in Japan, in terms of the Nikkei 225 traded in the Osaka Futures Exchange, did not react to the downside, but again, I think the market is likely to poise to actually reflect the reality with a pullback below Tuesday's low at 37,620. So by and large, I'm still maintaining a slightly negative outlook for equity markets worldwide. The only exception could possibly be the Hang Seng. So we can say that Hang Seng has been doing relatively well since the market hit a bottom of 14,796 in the futures contract traded in the Hong Kong Futures Exchange, and that was in the later half of January. So we can see that the price right now does suggest that we may be seeing a 3-wave rally. And if that's the case, a target of 16,800 to as high as 17,000 is a possibility. So do watch out for the possible 3-wave bounce in the Hong Kong equity index relative to the Hang Seng index. As far as currency is concerned, we can see that the dollar remains elevated, and this is also largely due to the hotter than expected CPI numbers released on Tuesday. We can see the index itself went to as low as 103.37 before ramping up to 104.85 on Tuesday, and the market yesterday was basically treading water with a bit of a pullback. Now, if you can see from this chart here, this is the 4 hours time frame chart, by the way, we can see that the market right now is trading in the mid-range of this rising channel here, and there is this technical support around this level here. So I do not expect further pullback. In fact, I think there is a very good chance this index may actually gun higher towards the 105.35 to 105.77 levels immediately, with the possibility of even edging higher towards the 106. So again, immediate outlook for dollar is bullish, and that being the case, we can see the principal currency remains on the rope, and euro versus the dollar is still trading lower, although we have a bit of a bounce yesterday, and that means that this bounce is going to be quite limited in scope. I do expect the prices to come back down in the euro dollar, possibly to test the 106 even level. Sterling is a bit of a unknown here. We can see that the market has held out very well above the 125 even levels, and yeah, last night the low trade is 125.35, and the market seems to be holding quite well. And of course, there is the possibility the market may actually be gunning higher. I've always maintained a somewhat more bullish outlook of the sterling relative to the euro dollar. If my view is correct, I think there's a very good chance, at least in the medium term, for the market to test the 127 level over time. Over in the Aussie, we can see Aussie remains a little bit vulnerable, even though we did see a bounce overnight. And by and large, I do expect the Aussie dollars to continue to trade lower, to perhaps test the October low of 0.6330 levels over time. Dollar Canadian is very bullish right now. You can see dollar Canadian remains elevated despite pulling back last night from a high of 135.86. I think there is still a little bit more upside left in the euro dollar versus Canadian, perhaps to test the 136 even levels. I think the market would have finished its run there and would be vulnerable to a pullback. Okay, and over in dollar yen remains elevated. Like I said, the Q4 GDP numbers that was released this morning did not quite negatively impacted the dollar yen itself. So that being the case, we can see the yen is actually strengthening, relative to the dollar. So this is actually quite a bit of an anomaly. Normally, if we have a weak GDP numbers, we should see the currency suffer as well. But we don't see that in the dollar versus the yen. The high traded overnight was 150.88. I think there's a bit of a scope left for the dollar yen to continue to edge higher. But I think topside is going to be very, very limited, because you remember last year, the market actually peaks out at 151.91. And then in 2022, the market topped out at 151.94. So we can see just under the 192 levels, the market is very, very cautious, because back in 2022, the Bank of Japan came in to intervene very aggressively. We saw the dollar yen traded just under 152 all the way down to 127. That was a massive, massive pullback. So again, players are very, very cautious as the dollar yen approach 152 levels. Then in the precious metal complex, we can see that the gold market actually traded to a low of $1,984.30 overnight. And it ended on a positive note. There's a possibility near term we can see the precious metal maybe even trying to go higher. But I think the upside is going to be quite limited if the view for the dollar is going to be strong. And we all know the correlation between the dollar and precious metals. If the dollar is going to remain strong, that means to say that conversely speaking, we were expecting lower prices in the precious metals complex, including gold and silver. When we look at silver is actually a lot stronger than gold right now. Now, we have known for quite some time silver has been underperforming relative to gold, and this could be the payback time. You can see that the market have a double bottom at $21.91 as recently as 2 days ago. We can see that could be the basis in which the market may bounce. Near term, we do not know how far you can go, but if the market plays out according to the three-wave corrective rally, then a move back to $23.32 is quite a distant possibility. Okay. In oil market, we can see oil market started to pull back from the Tuesday high of $78.74, and that has been on the back of an escalation in the Middle East. We have seen the Israeli military has moved in to attack Rafah, which is the southern border bordering Egypt, and that has been a a three-pronged attack. We have land, air, and sea attack index. Very small piece of real estate there. And remember, at the beginning of the war in Gaza, Israeli military has been urging Palestinian refugees to head south. And now that they have head south and been holed up in the small little space in Rafah, and Israeli military has been bombarding this small area, and that has, of course, elicited a lot of outcries among the international community, and that is seen to be in escalation. So when prices of crude oil rally on the back of this, after all, Middle East is a major oil producing area, so that is understandable. What is not understandable is how the price pulls back overnight to currently trade at $76.03 as we are speaking. So I think the bottom side is actually quite limited. This market is actually geared to trade higher in the face of escalating tension in the Middle East, okay? And in Bitcoin, we can see Bitcoin continue to edge higher. It is actually quite phenomenal because just 1 month after the Bitcoin BTC ETF license has been granted, we can see that the initial pullback in the BTC prices, Bitcoin prices has recovered mostly everything and has traded even beyond the January 11 high. And now currently it's trading at 52,500 levels. And this market is actually poised to go higher. However, a pullback is actually more healthy for the long-term viability of this bull market here. So if we do see a pullback, the area between $49,800 to $50,000, I think that will be a good level to pick up some more long position for an assault on the 55,000 levels over time. So this is my 2 cents worth. Now remember, tonight we have retail sales. Market is not expecting a good number, so but anything can happen on a retail sales number such as this. So do watch out for volatility tonight and as well as tomorrow night before we finish the week. That's all I have for you, and I'll see you back tomorrow morning. Bye-bye.